What is the situation? Should they be closing those accounts down completely and getting rid of that card completely, or just paying it down?
There's a big misconception there too, because if you pay it down and then shut it down, all your credit history is.
Did you know if you are getting ready to buy a house, if you do certain things in the wrong order, it's going to seriously decrease your chance of closing and getting those keys? So we're going to find out right now what the process is to actually make sure that you get a successful closing day and that you can move into your home as fast and comfortable as possible. Let's check it out. What is the process that we're actually going to do with a new client that may feel that their credit's not ready to buy, so they want to sit back and wait until their credit is to a certain score or a certain level that they feel comfortable they can move forward? What is that process like, and what are the steps they need to take to make that happen?
That's a good point. So that reminds me a lot of whenever people are setting like New Year resolution, right? And they don't actually write it down. Same thing with the credit repair. If they say, hey, I'm just going to continue to work on my credit, I don't want you to review it and give me a game plan, then we don't have anything that we can actually write down and say, hey, step one, we got to do this. Step two, we got to do this. So a lot of people end up printing the game plans that we send over to them. They're like, okay, yeah, that's right. Charles told me to pay off my Capital One first, then my Discover, then I need to reach out to this specific person to go ahead and get that one collection removed.
There's a better sequence to do, not just randomly throw stuff at the wall, right?
For sure. So number one, I would say paying down credit cards is the number one. Number two is settling or paying off medical bills, because those can be completely wiped off like they never existed.
Okay.
And then step number three usually is a lot of like collections that can potentially be disputed. There's specific rules in the state of Florida that whenever they charge you above a specific APR level, they're essentially breaking the law. And so they're not allowed to actually show it as a collection, even though it's affecting you. So there's a few of those that can also be removed. There's specific companies that we know of that do that are very, very well known for that. And those can be removed easily. So can you imagine if 1 or 2 months later, we have 2 credit cards paid down, 1 medical bill removed, and 1 charge off removed? The score can go from a 560 up to a 650, 660 within a 2-month period. You know, it happens really fast.
What is the situation? Should they be closing those accounts down completely and getting rid of that card completely, or just paying it down?
So there's a big misconception there too, because if you pay it down and then shut it down, all your credit history is gone. Essentially, you had a credit card that you had open for 64 months, and now you're closing it out. That's going to be detrimental to your credit score. So that's the first thing. And second piece, a lot of people think they need to keep a balance of like 30% or 10% or whatever. But really, all you need to do is pay it down to zero and then keep it at a $0 balance. And people have been sold to keep a 10% balance or 30% balance to get a better score. But the absolute best score is whenever you have a $0 credit account. You maybe just use it for gas and stuff. Keep it very simple. Pay it off every month. Don't let the credit card wins, is what I always say. Like, you want to win the game of you getting a few extra points, and then you don't pay any interest, and you keep the balance as low as you can every month.
When you're trying to build your credit and I'm going to spend $100 today at a location and I have $100 in my pocket, is it better to use my card and then pay that off immediately when I go home to show that it went through there, or it's just better to use the cash?
I think using the card is fine, and I just try to pay it off every single month. If you have cash on hand, obviously that's ideal, especially if you're in the middle of purchasing a home. I would rather use the cash during that transaction.
So don't buy a new BMW before I close on my house?
It's crazy that you would say that, because I have some clients doing that. Believe it or not, I'm like, oh my God.
Or they went and furnished their whole house.
Yeah.
So if you don't know this right now, if you are about to buy a house, do not finance anything. Do not open a new credit card. What are the rules there for that? Because people really don't know, and they're about to go furnish a house. They need a new car for their new 3-car garage. And what happens?
Yeah, until 24 hours after you've bought the home, you are not allowed to go anywhere. Like, some people end up going and getting like a Badcock $2,000 cushion, furniture, and then we end up having to disqualify them, because now we have to say, hey, hold on, they just got something the day of closing, because we look literally the day of closing to make sure that you don't have any new debts. And then obviously causes issues from a debt to income ratio standpoint. We have to repull credit, because now you have new debt. Scores could have gone down. And if you were on the verge of approving with a 640 and now we're down to a 635 because of that, we could lose approval. So you have to be very, very careful.
And it may not just be that, they're not approved to buy that house and that item, that couch. It could just be the fact that don't buy the couch first, because it's going to mess up that entire process.
For sure.
Yeah.
For sure. If you had the choice between like, hey, I'm trying to buy a home, but then I have my old beat up car, and I'm thinking of financing a new car, buy the house first and then finance the car.
Always buy the house
People
first.
always do it reversed, and then it's easier to finance a car than it is to finance a home. So start with the harder part, which is financing the house, and then flip-flop that to buying a car afterwards.
Yeah, I think a lot of people just don't know. Like they just assumed I'm approved, I'm good. I had a client, we were under contracts just before we started working together, and he had needed a new truck for his business.
Wow.
But we were under contract, and he really didn't share with his wife that he went out and bought a truck. And so he kind of just casually...
He slept on the couch that night, I bet.
Yeah, he casually mentioned it to his wife, like, oh yeah, I have to go buy the truck. And she said, what? And they called me to inform me they weren't able to buy the house. And it was 2 years before they could buy the house. So I thought she was going to kill him.
Yeah, no, I mean.
So yeah, so always check. And maybe you can buy small things, right? But the key to get back to communication is just check in with the lender and at least check in with the realtor and say, you know, where are we at? Is this an opportunity for us to go buy a fridge? And I tell people, just go ahead and find what you want.
Yep.
Put it on hold 24 hours after you close. You can do whatever you want, basically, but not before. Don't buy anything unless it's cash. And even then, check with the lender because they may be counting that cash as part of the pre-approvals.
And you mentioned something just a second ago about when we work together. I want to clarify, we don't work together. We don't work under the same corporation. We choose to work together. It's kind of like going to a doctor to help you out that you really, really like. We like working with you, and we were referred your information from one of our past clients. That's how we got connected. So the whole point here is we're advising you to get great information because, you know, I just said a doctor, but you're like a doctor. You're like financial surgery to go into your biggest asset and not make mistakes. Because those mistakes can last a very, very long time if you don't get the right advice up front. Sure. And that's why we keep coming back to you, because you give our clients really, really good advice. And there's not one client we've had that have been like, oh, why'd you give me him? They're always like, oh, he was the best guy we've ever worked with.
Yeah, and your videos, when you do your little videos, people love that. So Charles does these touch points where he keeps people engaged. He lets them know where they are in the process. And he does the same for us, by the way, which I love because I don't need to spend my day checking on what file is where and what's happening. One, it's not productive for me, and it's definitely not productive for you, for me to keep calling you, bothering you. So those little touch points just takes the pressure off. I know where we're at, and I know if there's an issue, you're calling me, and you're calling me before things are bad so that we have time to fix them. So that's, you know, people do business differently. Like, and what sets you aside is that you go the extra mile, and we like to believe we do with what we do. So I think it's good alignment.
Yeah, I remember they've been hyping me up the whole time, so I'm going to hype you guys. I remember the very first time. True. So we helped on the financing of one of Daniela's listings, and that's kind of how we connected originally. And she was like, "Oh, I kind of like you're giving me updates weekly on how things are going."
Normally, I have to beg for updates.
Yeah, literally. And so I remember then I went to an open house with Daniela, and I was incredibly impressed with how professional she was. And I remember driving back, I was on the phone with Chelsea, my wife, and I was like, hey, I have to work with them. They're like a perfect extension of us. They are professional. They are very knowledgeable. And, you know, you have realtors that you work with that it's like the cousin of, you know, an extended cousin. You're like, oh yeah, I'll just encourage the family. But they may have only done one transaction, right? And so they've only seen one specific scenario. Daniela and Justino as a team, they've seen like hundreds of scenarios that can go wrong and how to fix them. And so you need someone on your side that knows how to fix them, knows how to guide you, knows how to not put pressure. Like you guys will say, hey, this is not a good time to buy, or this is not a specific property that's worth pursuing. Like we talked about that investment property, right? Talk to us a little bit about why you thought that was not the right.
I didn't think it was a good fit for us, but again, maybe someone else would feel differently, but for us, it wasn't. So you don't want to go into a neighborhood where you see tons of for sale signs, tons of for rent signs, and then go buy in that neighborhood. It doesn't make sense. You know, at the end of the day, if you're purchasing it as a business, first, as you know, the numbers have to run. If the numbers don't run, you know, we can't get emotional about this. I tend to get emotional because he kind of course corrects me all the time. He's like, you like it because it's gray. I'm like, no.
Everything in the house has to be gray.
I'm like, yes and no. I'm still looking at the numbers. So just great community, by the way. It checked a lot of the boxes, right? So we want to be in a great area, something that's a little bit more established. Obviously, if it's gated, that's a big appeal. Amenities, like so, this particular community had tennis courts, it has a golf course, a pool, all that. So it checks all those boxes, and had been on the market just enough time for the seller to be in a position to want to have more dialogue about a better price. So all those boxes were checked. The house looks great. I get there, and as I'm driving, and again, due diligence, right? So just seeing it online and go click, yeah, we'll buy that. Sometimes you're really lucky and it works. If you have a great realtor, that person is going to be your eyes and ears if you're not there. And hopefully they're going to be really transparent about that. Hey, I see this, I see that. I've talked myself out of a lot of deals. Doesn't mean I've lost the client. It just means I've talked myself out of the deal that they thought they wanted. Because I'm looking at things differently. So when I went there yesterday, that's what I saw. I saw a lot of people selling, a lot of rental and oversaturation. And I just knew that over time, it's just going to sit for a while, or we would have to chase it down and price it lower and lower and lower. Therefore, from an investment perspective, it wasn't going to be lucrative for us because I don't want to play that downfall game. The idea is that, we're growing, not having to chase the market down. So it wasn't a good fit. Great. It's still a great neighborhood. Again, inventory is sitting a little bit longer. So for the sellers out there, you need to be pricing accordingly or things will sit. There's just a lot of competition.